Hi, this is Randy Finney with the right side of the chart, and today is Thursday, August 2nd, 2018. This is a midday market update. Take a quick look at the markets. I think it's a good time to do so. There's plenty in this update in these charts for both the bulls and the bears. So let's just dive into it. We'll go over both cases. Take a look here. So we obviously have I don't want to say conflicting signals right now. What stands out to me, we'll start out here with the ES charts. I'll get to QQQ and SPY in just a second here. So, and pointed out these divergent lows right here in both QQQ and SPY the other day, and they played out for a nice pop. And then what SPY did, or ES, I'm sorry, we're looking at the S&P 500 E-mini futures first. That one went on to put a second lower low in, unlike NQ. So we have even a larger divergence. And if you followed me for a while, you know this is what I like to swing trade, the 60-minute charts, these 60-minute divergent highs and lows. Um, and what I tend to look at, the way I look at this, when the primary trend is up, it doesn't take a very big divergent low to lead to a big rally, but you have to have these pretty big divergent highs and rising wedges. Negative divergence is a lot longer to get a correction. That's been the trend for months now, and actually past couple of years, other than the two big sharp corrections we had earlier this year in late January into early February, and then about a month or so later. So here's the glass half full bullish scenario. You're looking at this divergent low, which could play out for more. I'm gonna, as always, I tell you my thoughts, right or wrong. I don't like wishy-washy analysis, but I do want to point out everything, even though I'll give you my opinion. As always, I'll be right or wrong. So I don't think this is it for the correction. I think there's going to be more to come. It's hard to say that with strong convictions right now, based on what I'm seeing on the charts. I'm going to add another level here for you ES traders. I probably should move that line up just a hair if I could. There we go. Capture these reaction lows right there. There's a reaction high right about there. Of course, we have these reaction highs here from the other day. They still haven't been taken out. Either way, we're seeing an impulsive move up right now. And, the bigger picture is this wedge. When you look at that previous wedge right there, this certainly has the potential to play out for a lot more. And let me say this, as bullish as today might seem, and maybe it's a real deal, maybe not, keep in mind this is just a run-of-the-mill, so far, a run-of-the-mill counter trend bounce after a correction. So if you look at it this way, glass half empty, meaning you're bearish, looking for more, well, here's a SPY breakdown back on that last bearish rising wedge. It was pointed out, and it looks like mid-June breakdown. And we had an initial correction followed by a counter trend rally. Now, I'm talking about these zigzag. That's intraday noise right there. This is wave one down and wave two up. First decent counter trend rally. And so where I'm going here, it's really no different if you want to look at it this way. Maybe that's your first wave down. Actually, we haven't even taken out the previous high, so this one's a little choppier. They're never all the same. There's a first, the first leg down. You can put it that way. Another leg down, and again, these are the resistance levels to watch. And I think the most important one here in that line I just added earlier, 28.33. So we'll see where that's at. But so take it as you want. Again, my convictions right now aren't super strong, but if we are going to have another leg down, we're getting towards a pretty good shorting up. Now, I don't trade the ES, at least not recently. My preferred trading proxy, if trading the indexes, is NQ, and that's for two reasons. Number one, the higher beta. It's mostly tech stocks in there. It's like trading a tech ETF or index, and the overweighted, concentrated top positions. So you tend to get a lot more bang for your buck on both the long, the upside when you're long and on the downside on short trades, because ES is so diluted and so diversified with dividend-paying stocks, utilities, many different sectors. It's a lot more diversified than NQ. So that being said, there's ES. There's your levels to look for. These previous reaction highs, a break above that would certainly be bullish. Anything is possible right now, and I want to see what happens today. I'm more concerned today and tomorrow. I think if this thing's going to reverse, we'll reverse soon. Let's look at NQ real quick, get into that, because that's really where more of my focus lies lately. But again, I think it's remiss to trade any one index without keeping the other, especially NQ, because it's large cap stocks. So trading NQ, I always like to watch ES and SPY and QQQ, watch them all together. All right, so let's get back here. Remember, this was my bounce target zone and has been for a while. Right here, these levels. And what I've done today, and I posted this in the trading room on the site, I modified this middle line just so slightly because we had some reactions there, and I moved that to 70, about 73.14. We've taken that out. So where we're at, we are now at the upper end of my bounce target zone, and if you recall in the recent analysis, that's where I said anywhere in this target zone, those three levels would all be objective levels to short a counter trend rally. So we had, several shorting ops here. You could have traded off those first couple pullbacks. There's that divergent low that was pointed out recently, and so far this is the rally we've gotten off that divergent low. We had a really looks like a three wave pretty much up so far. We had this first initial thrust off the divergent low right into that bottom of that resistance zone, hit it a couple more times, then a leg down, and now a leg up. Uh, is that all? We'll see. Time will tell, but I can tell you this is an objective level. If you were looking to get short, I had a couple people, a couple questions on the site recently. Hey, where's the best time to short? And again, it was anywhere in the zone. And as I stated in the last video, you could scale in if you are looking for another leg down. And if you're bullish, I said the same thing. You buy long, you go, you trail stops up, and you're doing good. At this point, if you went long here, there's absolutely no reason not to raise your stops to protect gains and let it run. Trail a stop up, trail your stops up manually, or set a trailing stop that will automatically adjust. That's up to you. And targets right now, could certainly add a line here. That's about 74.48 or so. I certainly see some resistance there, but it gets pretty thin. And if I think if the Qs break above there, they're heading higher. So that's that. We are trading. Almost we hit that level to about the button today so far. That the uppermost resistance zone. And what I cannot promise you is whether a short here will pan out or not, but I can promise it is objective in my opinion. And you also have a very good risk reward ratio because your stop should be somewhat above. I would most certainly do it on a 60-minute or even a daily closing basis because this is a lot of upside momentum. This is an impulsive move up, just as this was an impulsive move down. And then we overshot support by a little bit and then kind of moved around that level. I call I call that a momentum fueled overshoot. And because of this upward velocity, this strong momentum today, wouldn't surprise me in the least to see us overshoot this level. So what you want to watch for is a solid 60-minute close above there, maybe even a daily close or a couple 60-minute candles. But as of now, it's simple. Resistance is resistance until and unless taken out. And from a pure, if you back out all the noise in the market and all the hype and Apple and bulls, Apple going to trillion-dollar company and beyond, and then the others, Alphabet and all that, not far behind to join it. Forget about all that stuff. Just trade the charts, and that's that. So there it is. That's it. And I just added to my short positions. That's me, what I'm doing. That's not officially trade on the site. So I'm going to continue to trade with this plan. I've scaled in through there, but I will not add a penny above there. In fact, I'm only concerned about scaling out. Even if we pop a little bit more, and if you want to know maybe an uppermost level, if you are looking somewhere to place stops and you're looking for a, a hard level right there. See these reactions? Extend that line. The NQ has no business getting above there. If they want to pop it and finish running the stops, I'm sure they're squeezing some shorts out here today. And again, these bounces that we had, and I'll get to the charts here in a second, a lot of those key components, I went over this recently on the NASDAQ 100, the five stocks that are really moving the NQ. Apple, almost all of it's at Apple today, by the way. Apple's by far contributing to the large portion of these gains, and you can tell by just looking at the QQQE, the equal weighted QQQ, NDXE, the equal weighted NASDAQ 100. Look at the NASDAQ composite and compare that to QQQ. All right, let's move on here. Here's QQQ on the daily time frame, and again, it's been highlighted recently. This is the trend line to watch. This is a wedge type pattern. This is a longer term, much more significant and important trend line, but this is the near term uptrend line. It's very well defined. Comes off the early April lows, quite a few reactions, and this is nothing more than just a reaction off that level. So we're wedging up higher. And if this wedge is going to break out, it'll break out soon. And if the pattern will be foiled, we'll go up through there and burn through the divergent highs. That's going to happen soon. Soon can be at least a couple weeks. I dragged the crosshairs to this point from today. If we rallied a lot more and burned through those divergences, about another 7% upside on the Qs, it would take up to a month or so. That could follow these patterns. But unless they are, I see these divergences, and I'm still looking for favoring another leg down. But until you break this trend line, like I said, the trend is up, support is support. So, the 60-minute charts, the world I've been living in lately to game these pullbacks and these rallies, that's the bend the pattern. So here's the 60-minute chart right now. I've added a resistance level here right about 179.04, and you can see a lot of reactions there. So I just showed you my I'm sorry, NQ E-mini charts right at resistance, the same level I've had for weeks now and have not modified that. And now we can see a lot of reactions here on the Qs when you look closely, a little break briefly below, and so that's a level about 179 give or take. And there's that level a little bit higher that I had on the chart recently of 180.09. I think I already showed you, potential. We go in and we back test this trend line. See right here, this made up the shape of, you had a divergent high right here, and this is sort of almost like an ascending broadening wedge pattern, but either way it was a trend line to be respected, plus 180.09. So that would be for those, let's say if you're long now and you're looking for a target to maybe take some profits if you were long down here off the lows, or you're looking to maybe even add to a position. Any solid break, especially close over 180, 180.10, would be bullish. So that would also serve as a stop for anybody shorting here, or shorting from down here that was willing to give it some room up to the top of that bounce target zone. So there's a level, the PPO 9 EMA, which is a great trend indicator, still below zero, and it's coming up to back test it from below. Quite often when it's tested from above, like it was right here, that level, the zero line acts as support. I'm referring to this dotted line, dashed line right there. And when tested from below, it can be act as resistance. So there it is. And again, when I look at these patterns, we have this divergent high right here, and we had a considerably larger correction. This one almost as much. Yeah, I shouldn't say considerably larger, but it was. This drop was from the highs. I'm just rough estimating this, about almost 5%. And that last drop there was about, from the highs, it was, yeah, about the same, I guess, 5%. Yeah. Okay, I eyeballed that one wrong. Here's a zoomed in version of that wedge I showed you on the daily chart of QQQ a minute ago. You can see this is that same uptrend line. There's the, we had the divergent high on the daily chart back here, correction, and here's that other divergent high right here. So we're still, like I said, we're wedging up. We're pinching in the apex of that wedge, but we were at trend line support, and that's right when my preferred near-term swing target on NQ was hit the other day. So not by coincidence, even though those levels had really nothing to do in common with each other as they were drawn. This is an uptrend line off the lows here. And again, we go back to that NQ chart. What I'm talking about here was the base of this, or the top of this basing pattern that we had here, right there. And that was, boom, that was where we hit, and that was my preferred near-term swing target. So this correction could be over. I cannot rule out the possibility of new highs, but I am leaning towards this being a counter trend rally, just like we had a, move down pretty sharp, bounce up, and then we went on to make another low. And again, they don't always look the same, so maybe this is, in the bigger picture, even if we just get an ABC correction, that could be your A down, B up, and there could be a C down to come that would take us down to these other potential targets. And then just not to forget the bigger picture, if we do get a reversal here soon, and especially if we go on to break this trend line on either a very impulsive break on an intraday, or especially a solid close below it, I'm talking about this wedge, we go on, I would certainly expect a reaction off this trend line if that does happen. So something like this, a little bounce there, but this is the measured target. This line right here is the widest part of the wedge, and I've covered this before, and that would take us down right about to those key lows that haven't been tested again. I mean, we tested that low once again back in April after we put it in early February. But if we break this and we break this primary trend line, I think we make another run at them again. And here's Apple, first stock trying to join the trillion-dollar club. Like I said, even before and after earnings, that there's still plenty of room to go up to keep these divergences intact at this point in time. Starting to get there on the RSI, but we're also quite overbought. But overbought, especially on this stock, is not a sell signal by any means. And you look at the daily or the weekly chart, and again, you have some big divergences that continue to build, but absolutely zero sell signals on Apple yet. A sell signal would be, especially out here on the weekly time frame, some type of bearish candlestick pattern, reversal pattern, a break below this 40-week EMA and a weekly close below it would certainly be a bearish technical event for Apple. But we don't have that now, so the trend is up. And yeah, this one's going to go until it goes. Certainly getting a little extended here. So just keep an eye on Apple. I don't have any near-term opinion. I would not care to step in and short that one right now just because I can't make a case to do so. Some of these others are starting to catch up since I've started this video. They were lagging behind. It was mostly Apple doing the heavy lifting, but I'll just go through these real quick. There's Amazon on the daily chart. Again, coming off. It's not by coincidence. A lot of these stocks fell down. And you hear me often say, when you trade on the daily time frame, that's why you wait for either a very impulsive break or a daily close below the trend line. There's that, look at that candlestick, that doji intraday break on Amazon and close right back on the trend line, and we're moving up it. So that's a successful defense of a key uptrend line. Very, very important trend line in my opinion. And here's a wedge. It's getting very ripe. Could pop anytime now. Now, this wedge has a potential, can morph into a price channel, anything like that. But we're down close to the bottom of it now. So keep that in mind. And there's Amazon. And I think most of these market leading stocks are still, despite today's move, there's Amazon below earnings from where they reported. There's Alphabet still below where oh no, it popped up. Basically, this one went to do a almost close to a gap backfill. There was earnings pop. Most of the earnings gains or post earnings gains, I should say, have been faded. Actually, about all of that. Yeah, it was a full back gap fill. You can see it right there. When I take the crosshairs, this candlestick now came right to about the highs. This is where we closed before they reported. So there's a full gap backfill. Now, if you're bullish on QQQ and Alphabet, this is where you buy. It doesn't get any more objective than that. That's a gap backfill. That's natural support. And obviously a bounce so far, but nothing huge yet. If you think the market's going to new heights or this particular stock, that's where you step in and buy with a stop somewhat below it. And if you're bearish, you watch, keep an eye on that. If we take out, go much lower than where we closed before Alphabet reported, then that's not going to be a good thing. And here's a trend line to watch too. So we're above trend. That's a bigger picture daily chart. I'm just brush on all these real quick. That was the other share class, Alphabet. Here's Microsoft. Here's some two key trend lines to watch. Microsoft still comfortably above those trend lines, but you can see it's faded the after post earnings gains so far. And, putting in a bullish candle today, that's candles engulfing the previous day's candle. Facebook still clinging to that key 169-ish support level, holding above it. And like I said, that was a low risk objective area to go long. I played a bounce trade off there the other day, but I took it out on the pop, and that one may be dead money for a little while. Who knows? There's Intel, bullish divergence on Intel, and that's one thing that's kept me on holding off on shorting the semis as an official trade idea on the site. This is a market leader, and it was down quite a bit before earnings, and then followed through to the downside. So there's your first counter trend bounce. Maybe that's what we're doing in QQQ now. Maybe not. And when it came down here, put in this divergence, and this is on the daily time frame. That's what's giving me pause. That comes right on the heels of the breakdown of this wedge, and I think it's safe to say if we just eyeball the measured target for that bearish rising wedge, I think it's been met. You take the widest part of the wedge here, add that to where the wedge broke down, and I think it's safe to say that's about it. However, that doesn't mean we can't go lower, even though that's a measured target. These are significant resistance levels. You can see right here, this level I had even before we got there. There's quite a bit. There's gaps there. There's reactions. So Intel has a lot of work to do now. Has to overcome that level. Has to overcome these previous reaction highs. So my guess is I still think this one and a lot of the semis are headed lower. So I think we bounce up here, and that would be an objective area to short. Push back to 50.68, somewhere around there for a swing down here. There's another resistance level, those previous reaction highs. So we'll call this for this time my bounce target zone. Sorry guys, trying to grab different tools down here. This screen capture software, you really got to click on them a couple times to get them. There it is. So we'll call that my bounce target zone, if you will, for Intel at this point in time. All right, let's wrap it up here. Anyways, that's what to look for. Let's see how the day ends, and if they can, if the NQs and QQQ can manage to close comfortably above those resistance levels today, we'll see if they can hold it into the end of the week. And it's so often the case that you close right on or below key support or resistance on the weekend, and makes swing traders think twice about what they take home because you have 2 extra days of overnight risk. So, but the day is far from over. It is heading on almost not even 1 o'clock Eastern time now. So we have 3 more hours to go, and I think it'll be interesting to see how today closes. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.